Hey all, welcome to ShareTreck. This is Raj here. What an amazing day. The market fell like crazy and it was very scary in the morning, but I think there is no need to worry too much. Of course, my personal opinion, not financial advice. Let us look at the damage that has happened today and what's likely to happen tomorrow. Let's get started. Welcome back, friends. We are in the Fear and Greed Index. It's showing a reading of 69, which I think, in my opinion, it's good. I don't see any problem with that. It's only when we go above 76 and into extreme greed that we end up having a huge amount of volatility. I think the volatility should go down. Looking at the stock map, I'm seeing the money has gone totally out of the stock market, and there are only a few pockets of greens here and there. And that's not much to talk about. And all the culprit for the whole fiasco is the inflation data that came in today. And personally, I think we had a knee-jerk reaction today. Tomorrow, the market should look good. That's my personal opinion. Of course, you can't take it to the bank because nothing is certain. But based on my past experience, I can say that it was a knee-jerk reaction. I'll give you some idea why. Because let us look at core inflation. Month over month. Consensus was 0.3, previous was 0.3, and actual is 0.4, up by a basis point out here. And then core inflation year over year, it came equal to the previous. It was not above the previous, it came equal to the previous, but above the consensus. And then if you look at month over month, it just came 1 basis point above the consensus. And if you look at the overall inflation year over year, it is actually lower than what was recorded previously, and it is slightly higher than the consensus. So I think I'll look at the inflation rate year over year, and I would say that probably we have a knee-jerk reaction today. And also the fight against inflation is not a linear progression. The graph can go a little up and down, plus or minus a basis point or 2 basis points either way. And we get exuberant when it goes 2 basis points down, and we get absolutely scared when it goes 1 basis point up. It's never a linear progression. It's always a zigzag towards the ultimate destination, which is going to be a low inflation destination. And yeah, I think that's what I would like to say. Our next major event is going to be retail sales month over month. It's coming on Thursday. That said, let's go to the TradingView platform and have a look at the Nasdaq Futures. See, it's already become a little positive. The Nasdaq Futures are already looking positive. That kind of, bolsters my opinion that we had a knee-jerk reaction today. I did buy some shares. I'll tell you what I bought. Let's go to indicators. We have QQQ, which is down minus 1.56. Post-market, it's up 0.05%. It has unfortunately fallen below the diagonal line of support. Let me confirm that 428.55 is where it stopped. And the diagonal line of support that we have here, 429. So that's a resistance. Let me mark these resistance. I have not maintained these charts in a while. So these are all old resistance lines. So we have fallen below that. We are below that line of resistance, and tomorrow it's going to be difficult for us because we have got the diagonal line of resistance which we had to contend with, and also this horizontal line of resistance to contend with. But I think that today we had a knee-jerk reaction because there is a huge gap down out here, and this gap down needs to be filled up. And we have fallen below the 9-day exponential moving average, but have the support of the 20-day exponential moving average. So I think we should be able to, there's a possibility for us to bounce back tomorrow, assuming that this was a knee-jerk reaction. Again, see the spike on VIX. This is indicative of a knee-jerk reaction. Whenever there's a huge reaction like that, there's always a drop the next day. So I'm hoping for that. Next, let us look at S&P 500, which was down 1.38%. Again, there is still plenty of momentum left in there. Dow Jones was down 1.36. US dollar index was up 0.74%. This is because of interest rate hike expectations. IWM was down minus 4.11. I had praised IWM yesterday. We had this called as 3 soldiers. It's a very positive bullish sign, but it just fell down because of the economic news. US oil was down 0.09, is down 0.09, market is still open. Put call ratio is still bearish. And then if you look at the broad support, it has fallen significantly, so we don't have much support. There are only around, I think 51% of the companies on S&P 500 which are above their 50-day average. So overall, there is a great deal of weakness. I must acknowledge that. But again, what I would like to point out is the huge drop. I don't think anything warrants such a huge drop, given the fact that we were tapering down anyway, gently. So that's my point actually. Go on to genomics. And in genomics, we have Beam Therapeutics, which was down 10.24% after going up significantly just on sentiments. And there was no news yesterday. Let me see if there is any news today. No, there is no news. VERV was down minus 9.23%, supported by the 9-day and the 20-day exponential moving average. And chart is starting to look weak because momentum is at average. Prime was down 9.19%, damaging the charts as well. DNA was down 10.60%. Again, all the supports that were created have now become resistances. And also some of the exponential moving averages, like the 50-day, has become a resistance. So we have problem out here for DNA. NTLA was down 10.67%, and the chart is starting to look bad. Bionanogenomics was down 8.46%, and again our support which was created, the last bit of support, was again converted into a resistance today. And the RSI, which was kind of moving up smartly, has now gone back firmly into below average. PACB was down 9.39%, below the 9-day exponential moving average, looking incredibly weak. And then we have Editas down 8.98%, and Caribou was down 9.26%. Chart is still looking okay. Bluebird was down 9.85%, going below the $1 mark once again. And then we have ARKG, which was down 6.98%, and it has in the process converted some of the supports into resistances, and this is going to come back to bite us because going up is going to be difficult again. It's also converted the 9-day exponential moving average and the 100-day exponential moving average into resistances. So let's look at Allogene, which was down 7.06%. It was anyway, the RSI was overbought and there was a whole lot of growth. So this is but expected. I'm not complaining about Allogene. Illumina was down 4.44%, and the chart is not looking good anymore. CRISPR is down 4.79%, but it was smartly stopped by the bull channel in which we are riding. So it got support in the diagonal line of support, and it's still in the bull channel. So everything is good with CRISPR Therapeutics. Momentum is also out there, so it should do well. Now we are going to have the earnings today. I'm going to make a separate video for CRISPR Therapeutics after the earnings. Then we have IMTX, which was down minus 1.65%, and it's been held by the support at 11.12, and IMTX is at 11.30. So that worked out well. IMTX chart is still looking decent. I would like to point out that yesterday I had mentioned that all that was green is going to become red because of whatever may happen with the economic news. So we kind of knew what was going to happen. And it stands to logic that especially when you see companies like Allogene, which have been doing quite well, suddenly trying to give a reverse, but not so much. It's a question of sentiment. If it was something really bad, I think we would have seen this one also lose a lot like other companies, but it did not. So I am still thinking that it's a sentiment, and tomorrow we might see a better day for genomics as well. Then we go into AI. ARM was down today almost 19.46%. ARM is very, very expensive in valuation compared to other companies in its peer group. So it's likely to lose more fat and probably come closer to the 9-day exponential moving average. But tomorrow I'm expecting a bounce back, and ARM is likely to be mildly green tomorrow at the very least. FNGU was down 4.20%, but it started low and picked up. That's the positive for FNGU. The chart is still intact. INTUIT was down 2.85. below the 9 and 20-day exponential moving average, substantial weakening, but momentum is still intact. Palantir was down minus 4.15%. It's still in the overbought zone, and it may move sideways tomorrow to cool off the RSI and then pick up further. But Palantir is starting to get the AI effect, and it's going to be a stock to watch in my opinion. ASML was down 2.79%, pure sentiments due to the economic news. 889.49 is the support, and we are at 903.32, just above the support, so we are fine, we are doing well out here. Chart is still intact. RSI was overbought, it's back into the below 70% zone, good for it. Microsoft was down 2.15%, firmly below the 9-day exponential moving average, but supported by the 20-day exponential moving average. Momentum is still intact, so Microsoft can recover. Amazon was down 2.15%, and with Jeff Bezos selling $2 billion worth of shares, I think it's going to definitely have an impact on the share price, and this will be a good opportunity to buy Amazon, in my personal opinion, not financial advice. And you can see that there's a doji candle, a candle of indecision, just below the 9-day exponential moving average. Chart is intact, momentum is still intact. Intel Corporation was down 1.98%, below the 9-day exponential moving average. Momentum is weak and chart is looking weak. Adobe was down 1.63%, chart is again looking weak. It has fallen below the 50-day exponential moving average. Google was down 1.59%, and it has fallen below the 9-day and the 20-day exponential moving average. And there is a gap down out here which it will have to cover. Fundamentally, Google is not overvalued as compared to its peer group. So if anyone bounces back, it has going to be Google. But there is a general feeling that Google has dropped the ball, and its search engine dominance might fade because of AI, and Microsoft might eat its lunch, and there is Perplexity AI nipping at its heels. So that's the reason why you will find a little bit of tentativeness on Google, but it's in a bull channel out here, which is still intact. So this is the bull channel in which it is going. So I'm not yet worried about Google. Apple was down 1.13%. Chart is looking weak. It has fallen below the 100-day exponential moving average as well. Meta was down 1.87%. And it's supported by the 9-day exponential moving average. RSI was overheated, so this explains it. There's a huge gap fill to be done. So I'm afraid that if it falls below the 9-day, then it's going to try to fill this gap. That's my worry. But the momentum is still intact, so Meta has got some hopes. AMD was down 0.22%, and it has fallen below the bullish pennant. So what I'm going to do is I'm going to adjust the bullish pennant for now and pull it forward, because it technically still makes a bullish pennant. We have to adjust with the market. So that's exactly what I'm doing. I'm going to adjust this. So our bullish pennant theory is still intact, and we'll see what happens tomorrow. Momentum is intact for it to move up. NVDA was down 0.17%. Friends, the strength of NVIDIA is because it's got great PEG. So it's got future growth, which is very highly rated, and that's why it is still doing very strong. It has done relatively better than all the other stocks in our watch list for AI, and that's the reason why. And tomorrow it could pick up again further. It's got the support of the 9-day exponential moving average. My only concern is that the RSI is overbought and it needs to cool down, and it hasn't cooled down yet. And we have earnings coming up on 21st February 2024. So in terms of my conclusions, I think that the market has overreacted, and the huge drop that we saw, it was very uncharacteristic. And there is a phenomenon called as dead cat bounce. So when the market is in a really bad situation, like it was some while ago, and it's in the bottom, many times what happens is you get what is called as a dead cat bounce. When there's a huge drop, there's always a reciprocative buying, because there are a lot of people who are bottom fishing, who think that the bottom has reached and they buy. It's only time that tells whether someone is catching a falling knife or not. But typically the drop is always characterized by a dead cat bounce, and we will not know that it's a dead cat bounce until it falls the following day after that. So that's the characteristic of dead cat bounce. So anyway, I'm expecting a bounce back tomorrow, not only for genomics, but also for the Mag 5 and the AI stocks. With that, my friends, I'd like to bring this video to an end. Please put a like out there, and do not forget to check out my fundamental analysis of NVIDIA versus ARM Holdings versus AMD. It'll be interesting. Take care. Bye for now.